2026 0220 0700 SGT Americas. U.S. equities extended gains into the Feb 18 close, with the S&P 500 up 0.6% to 6,881.31, and the Nasdaq up 0.8% to 22,753.63, helped by chip and AI names while investors watched for upcoming Fed minutes. The 10-year Treasury yield edged up to about 4.08% after better-than-expected industrial production, durable goods orders, and housing starts. Volatility eased, with the VIX cited around 20.29. Story 1. Cybersecurity. Palo Alto Networks reported results that topped profit and revenue expectations, but the share price fell sharply after management issued weaker-than-expected current quarter guidance. Investors keyed on forward billings and margin trajectory rather than backward-looking earnings. Today, watch whether the guidance is read as company-specific execution risk or a broader demand normalization signal across security software. Story 2. Software. Monday.com guided fiscal 2026 revenue to $1.452 to $1.462 billion, about 18 to 19% growth, below a cited Wall Street consensus around $1.5 billion. The guidance cut also drew a securities law investigation headline, which can amplify volatility even when core demand commentary is unchanged. The near-term takeaway is that markets are repricing growth software off forward guidance precision and sales efficiency signals. Europe. European equities cooled slightly after recent highs, with broad indexes cited down about 0.1%, as geopolitics and central bank messaging stayed in focus. Banking stocks were weaker in that snapshot as investors digested a higher-for-longer inflation risk framing. Utilities also faced headline pressure after Italy's move to raise corporate taxes on power utilities. Story 1. UBS. UBS reported a 56% surge in net profit on strong wealth management and investment banking performance. Importantly, UBS said it plans to repurchase at least $3 billion of shares in 2026, matching last year, with an intent to exceed it. That buyback commitment is a concrete capital return signal that can reshape investor expectations around profitability and capital ratios. Story 2. Pharma. GSK's new CEO Luke Miels flagged slower sales growth in 2026, while shifting emphasis toward pipeline build-out as key HIV drug patent expiries approach. Novartis pointed to a low single-digit percentage decline in 2026 operating profit as competition from generics increases, including around Entresto. The message, defensiveness is increasingly driven by pipeline readouts and lifecycle management, not just steady top-line growth. Middle East. Risk sentiment was framed around geopolitics and commodities. Oil held above about $70 a barrel in reporting that highlighted Iran-related tension risk to supply, while gold steadied as a safe haven amid Fed uncertainty. Credit trading commentaries still flagged specific bond moves and spread dynamics, and sustainable finance was positioned as a key 2026 theme. Story 1. Sustainable finance. A sector note cited expectations that Middle East sustainable bond issuance could reach roughly $20 to $25 billion in 2026, supported by a surge in sustainable sukuk and project finance needs tied to renewables. The same coverage referenced January 2026 issuance examples, including Emirates NBD's $300 million blue bond, alongside a $700 million green tranche. The concrete point is that labeled issuance is shifting from pilot deals to recurring funding programs. Story 2. Insurance. Abu Dhabi National Insurance Company, ADNIC, was cited with 2025 net income of 475 million dirhams versus 417 million prior, and an annual dividend of 0.47 dirhams per share. In a region where income-focused flows can be meaningful, explicit per-share payouts can act as a near-term catalyst. Asia-Pacific, including Australia. Australia dominated the macro signal in the retrieved material. The RBA's February 2026 statement projected trend mean inflation peaking around 3.7% and headline CPI around 4.2% in mid-2026 before easing, while unemployment was seen drifting up to about 4.6% by mid-2028. The outlook framed aggregate demand as exceeding supply into mid-2028, implying restrictive policy for longer. An IMF paper also highlighted labor market resilience, with low unemployment and contained wages supported by labor supply growth and sectoral shifts. Story 1. ASX. ASX Limited was cited warning that 2026 costs could rise about 20 to 23%, driven by remediation after system outages and ongoing regulatory scrutiny, alongside an ASIC probe tied to a prior chess failure. For investors, the key question is whether reliability investment and governance changes restore confidence in the market's core plumbing, and whether cost growth is a one-off reset or a new base. Story 2. Australia funding. A funding roundup cited Niera raising $60 million in a Series D for physics-enabled 3D models of critical infrastructure such as power grids, and Dirac receiving $20 million in equity from Australia's National Reconstruction Fund. The read-through is that capital is clustering around hard tech, tied to infrastructure resilience and strategic capabilities, often with public funding as co-sponsor.